the old world of energy investment is over. We're now seeing is where you need to adapt. On the one hand, you need to combine different generation technologies. On the same side, you bring in data centers, and you need now also more technology if you want to sell the electricity, because now you combine different things with another, and where you need basically the expertise, and we see this with optimizers that can write algorithms that basically AI that figures out what are the best trading patterns for your asset.
Hi guys, this is Bhavesh here from Tracxn. Today we are very happy to be sitting with Andre Gentil-Kraatz, who is an executive director at Ikarus Capital. He brings in decades of experience in company valuations, investment analysis, financial modeling in M&A industry, investment banking industry. And he's recently has been working in the energy space for quite some time now. Andre, thank you so much for being with us here. It's a pleasure to have you on our podcast.
Thank you for inviting me.
So, Andre, if you can just throw some lights on your day-to-day journey at Ikarus Capital. I think I saw you are extensively involved in the energy space, energy industry. So, if you can just help us understand about how the energy industry is shaping and to our audience.
Yes. So briefly Ikarus Capital, we're an M&A advisor. That means we help our clients raise funding either through financing or through sales. Mm-hmm. That is the main. And I work at the moment mainly on transactions in Germany in the energy space, where we see mainly two types of financing that are needed. One is companies looking for growth capital, because they say, okay, we have a pipeline of projects, we want to grow, but for that we need money.
Okay.
And the other is companies that say, okay, they don't really want to transition to become an independent power producer, an IPP. So they want to sell their assets, and they're looking then for someone to take them on. And you have investors from the outside coming in who want to build up a independent power producer business, who are then interested in buying these assets.
Understood. How is the entire energy industry actually accepting this entire, getting along with this entire funding? So, for example, I am seeing a lot of venture capitalists also entering the energy space, right? And you know how venture capital industry works. They basically pump in the valuation, and they pump the valuation, and the entire thing goes crazy, right? Overnight. So an energy industry as in general is very, very different. It is a very typical old-fashioned traditional business, right? And traditional businesses are very different than tech businesses. And VCs are basically all tech-enabled VCs, right? So they are very heavily tech-focused. So how do you see this entire thing shaping?
So the energy space itself is a very wide space. So you have some areas which you can operate with a classic VC model. For example, there's now a lot of need to come up with new systems, new softwares to manage, for example, batteries and assets. So this is where the classic VC model works, because you develop a software, you don't actually touch the assets, you find your clients, you sell it to them. So, but the majority of the space, and this is also the space I'm in, is about the actual physical assets. So we're talking here about utility scale, solar farms, batteries, wind farms, and now also more and more data centers from the hardware side. So now this is a different space, because Facebook always had this famous saying, move fast and break things. So this doesn't work in the infrastructure sector for those assets, because you can't move fast, because you need all kinds of permits and studies before you can do anything. And the grid operators don't appreciate if you try to break things. So you need to continually add into a machine that can't be that needs to be operational. That if you cause an power outage, we saw this, for example, earlier this year in Spain, a lot of people won't be happy. So this is why then a lot of people, especially on the network side, are conservative, the grid work operators, because they can't just say, let's throw our old software stack in the bin and try new wild things, because they need to make sure that the electricity grid is operational 100% of the time.
Correct. But how do you see this entire infra? I mean, what is it? I mean, I think this is what the distinction is between the infrastructure and tech investing, isn't it?
Yes. So infrastructure is also, it takes a lot longer, and you have to be honest, the returns for infrastructure assets are very different from what you would expect from a VC. Normally, a VC, you fund a few projects, and then you hope one of them or a few of them, you make a good return that compensates for the ones that you lose your bets along the way. Infrastructure development is similar. You make a lot of bets. You need to start developing a lot of projects, because only few of them will make it to the finish line. But when you come to this, for example, the return, when you valuations, the unlevered return of a solar plant in Germany, you're somewhere around maybe 7.5% equity IRR.
Is it?
Yes.
Wow.
So this is then, there are investors out there because they know this game, and they say, okay, once the solar plant is operational, it will produce my cash flow for the next 40 years. But the price is you need to live with returns of around maybe 7%, 8% unlevered. Batteries are slightly different, because batteries, there's a lot more risk that you take with them from the trading side. And the batteries make a good deal of money from buying and selling electricity in the day-ahead market, in the intraday market, providing services. And there we see return requirements are different. For example, again, in Germany, we see the unlevered return equity IRR for a battery project is then more closer 13-14%.
Oh, wow.
And this is where you then start to moving into private equity territory. But also you see with a battery, the risk profile is very different, because if your algorithm for the trading is bad, you lose a lot of money. If you have a wind farm or a solar farm, as long as it's operational, when the wind is blowing and the sun is shining, you're making money.
Absolutely. But what is this about? You mentioned that, not everybody, when they start the project, because it's all hardware, there's a lot of infrastructure required. A lot of people start their journey in building this entire infrastructure, but not everybody reaches the finishing line. So, I mean, what are the challenges? Why is it that not everybody is able to? Because it's infrastructure, right? It's not just a software. There's a lot of money involved in building things,
So usually if you want to build some energy infrastructure, so on the generation side, you need three things. You need land, you need a building permit, and you need access to the electricity grid.
Okay.
Usually finding land is the easiest part. You need a local team who just goes, knocks at farmers' doors and says like, oh, we saw you have this field, we're willing to pay you more than you make from actually growing crops on it. So farmers are usually the easiest to convince to then sell their land. Then the second step is getting a building permit. And this is where you need to conduct all kinds of environmental, archaeological studies. These can take time. For example, on some areas for wind turbines, you need to have studies about the migratory pattern of birds. So you need a whole year worth of observations. So this takes a lot of time. And then, of course, since a lot of them are local decisions, if the local population or the local council doesn't want them, they simply can say, no, we don't want this.
Is it?
Yes. And the third hurdle, the grid, the access to the electricity network used to be easier in the past. Now we have the problem, we have so much build out that because the network operators need to be conservative, they say, oh, we can't give you a new connection. So this could kill a project. Or they could say, yes, we can give you a connection, but we will put certain restrictions on it. For example, that you can only export or import at certain times of the day. So, and this is why if you want to develop energy infrastructure assets, like in a VC bed, you need to start lots of projects, because you know at least 50% of them will fall off along the way.
Oh, wow. But there's money invested in this, isn't it?
Yes. So you usually need to spend several tens of thousands of euros, pounds, to get all the way to the building permit. So this is then money that is lost in that case. Plus, of course, the personnel that was working on those projects.
Wow.
Usually for the grid connection, which is also very expensive, you only need to start paying when they actually go to you and says, and confirm, yes, we have access here. That's when you start paying for advanced costs for the grid.
Oh, wow. But then what is this evolution of, I mean, I'm seeing a lot of evolution of power purchase agreements. So what are these exactly?
So traditionally, especially in Europe, you had subsidy schemes. You had, for example, the Renewable Obligation Certificate, ROC in the UK, or the EEG in Germany, where you just connect your power plant, you go to the government, says, here, I have my wind farm, I have my solar farm, please give me a subsidy for 15 or 20 years.
Okay.
So this was the old world, and it was needed because the cost for especially solar and wind was so high, it wasn't economical with the power prices at the time.
Okay.
So now the costs have come down drastically. I mean, you have these typical curves where you see wind PV costs just falling. The same is now happening to the battery, where you say, okay, we're now reaching a point where subsidies are not that important anymore. So, but then you have the problem is, okay, you still need to sell the electricity. Someone needs to pay you for what you produce. So, and these contracts are then called power purchase agreements, PPAs. And the easiest one is to go to a utility, a Stadtkraft, an Engie, a Uniper, sign a contract with them. They buy everything from you, and that's it. But because and utilities make their money from trading electricity, they will never pay you the best price. The alternative is you go directly to an end customer, to a corporate that has a large energy demand, and you negotiate directly with them a corporate power purchase agreement, which often brings you a better price. But because you're negotiating with a corporate that maybe it's their first project or they have only done 2 or 3, it takes a lot longer because they don't have the experience. And usually in corporates, the decision-making process also takes longer. So where you say, yes, you can get the higher price, but it is a lot harder and takes longer to go down the corporate route.
Wow, that's crazy. But then where is the advisory gap here? And I mean, what does a good advice actually looks like in this?
So this is where we see 2 different types. You have your more generalists like EY, JLL, who is like the usual. They throw their graduates on it, and they tend to be the cheapest in the market. And it works very well for large portfolios that are already established. If you have a British solar farm, I mean, that's been done and dusted for probably by now 2 decades.
Right.
So this is relatively easy. And there's not much as an advisor you can do wrong if you have an operational portfolio, because you have the history, you know who you approach for the big ones. If you are new to the sector, or if you're just a developer that knows, okay, I know how to get my land, my building permit, and my grid, but nothing else, it's a very different game, especially now that we are transitioning into the new era of building hybrid assets, where you say you no longer build just a PV farm. You combine your solar farm, for example, with a battery, or put in wind in the mix. And then you need to also start going out and need to get your own power purchase agreements. It's getting more and more complex, where you need advisor with sector expertise that's done this a lot of times, that can help you actually identify the points where you can increase the value of your assets, but also that has the necessary context, that knows where do you need to go to get the best power purchase agreement, which banks offer you the best financing, and that helps you to structure your deal. And this is then also, we see this so on the this is if you want to sell or finance, but we also see this on the market entry side, with people coming into a new market, because they know is every country in Europe is different.
Correct.
From the regulations, how the market works. So you need someone experienced that can introduce you to the right people, to the right sellers, to the right banks, and to explain to you how does that market work.
Wow. But I think the energy sector in general, I think has taken up a lot of interest in the last, especially in the last 1 year. A lot of attention, right? And especially, and it has actually come in at an intersection where AI is also heading at the same pace. Energy is also heading at the same space. AI needs energy, right? And energy also basically needs AI to optimize the entire circulation. So how do you see this AI, impact this entire energy industry and shape this entire industry?
Again, we're here at something where the industry is pivoting and adjusting. So in the past, you simply built your projects, looked for someone to buy the electricity, and if you got lucky, you got a Microsoft PPA that was investment grade rating. Banks were happy, everything was fine. But now we see there's a lot of demand for data centers, and data centers like renewable energy assets have the same problem. They can't get access to the grid, where the network operator then says you need to bring your own generation. So what now again developers are doing is, again, they're adapting. They say, okay, I know how to build a solar farm, a battery, a wind farm, but I also can look up where's the fiber backbone. So where are the power lines? And we do this, for example, now with 2 of our clients who have done this exactly. They come from the renewable energy developer side, and then they said, oh, wait a moment, there's a fiber backbone. So why don't I also build the data center? So they're not planning on basically operating the data center, but they say, okay, I have the power supply already. I have my the transmission lines. I have the fiber backbone. I can secure the land and get a building permit for a data center. And then I get a specialist in to build it and to operate it.
Wow. That's amazing. I think, Andrew, this has been a very interesting conversation. I have really enjoyed this, and I never knew about this entire energy infrastructure, and especially how the valuations were getting pumped because VCs have kind of now transitioned into the energy industry, because that's the next big thing and that's where the money is. And yeah, it has been very interesting. Thank you so much, Andre. It was amazing talking to you. And one piece of advice, because you have been in this industry, investment banking industry specifically, for so long, and we see a lot of people now, new generation, actually inclined heavily towards the investment banking industry, and they're very, very fascinated with this market, right? What is that one piece of advice that you would give them?
I think at the moment, it's a good time to come in, because the old world of energy investment, where you simply says, I build a solar farm, sell the electricity for 40 years and don't need to worry about it, is over. We're now seeing is where you need to adapt. On the one hand, you need to combine different generation technologies. On the same side, you bring in data centers, and you need now also more technology if you want to sell the electricity, because now you combine different things with another, and where you need basically the expertise, and we see this with optimizers that can write algorithms that fit, basically AI, that figures out what are the best trading patterns for your asset. So the world is changing, it is getting more complex, and that's a good time to actually enter the industry.
Correct.
But you need to be realistic about the returns. So you can make VC returns if you stay on the software side, maybe if you go to batteries, but if you simply think, oh, I'm going to open up a developer and I'm going to make some good money in 2 or 3 years, no, then this is not the industry for you, because you need 2 or 3 years until your projects are ready before you even start spending the real money.
Wow. So it's basically a long game. You need to spend at least
Yes.
10 years in this entire thing.
Exactly.
That's a lot. But I think that's eventually what a proper plan looks like. I mean, somebody thinking just about 5 years, 3 years, 4 years is nothing. The actual return comes when you actually think long term. It is 10 years, 15 years, 20 years down the road.
And this is where we see a concentration in the sector, where the bigger players are now buying the smaller players, because if you think it at a long term, you can plan completely different, and then you can start buying the smaller ones that have capabilities or assets that you are missing.
Thank you so much, Andre. It was amazing talking to you.
Thank you.